Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Looking back on yesterday's action, the S&P had one of the narrowest ranges we've seen for a while, only 8.37 handles. I've not seen that type of action for a long time. The WaveTech Volatility Index has dropped to 16.37, and that's also as low as I've seen it since this whole debacle started. You have to go back to January to see those kind of numbers. If the WaveTech Volatility Index drops below 14, that's going to be a warning sign suggesting we could see a minor correctional phase trading back into some of the moving averages in the pattern. I'll discuss all of this in the technicals here in a few minutes. In yesterday's fundamental reports, the housing index came in and was at an all-time new high. It's never been this high. If you were to go back and watch some January videos, I used to only do one once a week. I was talking about the huge rally that I saw coming in lumber, and I thought there was going to be a big boom in housing. We saw a huge drop in lumber, and of course the expectations for housing was very bleak until the Fed came in and bought MBSs and supported the markets, and now we're in this housing boom because folks are moving out of the cities or away from urban areas. I will cover lumber tonight just so you can see the action that we've seen there. It is telling a story of what's likely to continue to evolve in the economy as we go forward. Today we're also going to get housing start numbers, and remember, all the numbers that we're seeing coming out are still Q2 numbers or second quarter numbers, and these are all coming in much better than expected. The reason why these numbers come in better than expected is because the estimates were just all over the place on how fast we're going to be able to come back. We have several earnings reports coming out, but I'm focusing in on Walmart, and Walmart's earnings is likely also to give us a better than expected picture. Once again, second quarter earnings. All the metrics that continue to come out in Q2 are a lot better than expected. We're starting to see little glimpses of July, and as we go into September and October, as I've talked about before, we're going to see a different picture start to unfold. It's going to be pre-election. There's going to be a lot of things going on. So hopefully volatility will kick back up so we're not stuck in this very low volatility range, at least from the S&P viewpoint. The one thing we can be thankful for is we've got plenty of volatility in the metals and plenty of individual stock volatility, especially in favorite stocks like Tesla. The other thing that I'm looking at, there's another Warren Buffett trade coming, I think. I'm researching it right now. If you recall, I put a trade out when Buffett sold the airlines, and there was some really nice money made on the airlines on that trade. There's actually a secondary trade going on in the airlines now, but it's not nearly as strong as that initial rebound was after that. Well, Buffett sold JP Morgan and he sold Wells Fargo, and those things are crushed right now. WaveTech does have some buys going in. I will review this concept and this idea on the live stream on Wednesday. If you're new to this channel, just watching this for the first time, every Wednesday I do approximately a 2.5-hour live stream. I cover individual stocks that go in much more depth on a lot of analysis on different markets. So join us for that on Wednesday. It's a lot of fun. We cover a lot of material. While there's not a lot of fundamentals coming out, we do have the FOMC meeting minutes coming out on Wednesday, and then Thursday unemployment claims. Once again, I'll discuss this number, which is the continuing claims, is the one everybody's going to be watching. And then we have retail sales on Friday. So there's plenty in this week to drive the markets. We're still winding down the earnings season, so there's plenty to go through yet. Let's go ahead and take a look at the charts and see what they're telling us for Tuesday. Beginning with the WaveTech database, there's very little going on. The markets continue to hover up around this 3380 level, grinding. As I mentioned in the opening comments, we're in a very narrow range. In the short-term database, there continues to be a slight rotation. In daily 3.2, we had 235 buys versus 244 sales, so it was neutral. On the 1.2 long, we did see 227 versus 93 buys, so it was slightly negative, but nothing material. The percentage bullish remains at 76.41. I am expecting to see this database contract a little more down below 65%, possibly going as low as 40, especially if we continue to grind out at these levels or even see some moderate downside in the current configuration. This video is getting done a little late tonight. It's right at the London Open. We are seeing some selling as the futures are dropping 8 handles right now. There continues to be some liquidation. As I mentioned in the opening comments, this contracting range does set up a potential for a minor sell-off in this pattern. As we look at the S&P futures and the market grid, you'll notice that the low so far tonight has been 33.71. As we trade down toward the S2 number at 33.67, it is possible that we're going to see the STX number, which is 33.55 today, which would represent a reasonable sell-off, but there's also the 10-period moving averages right there, which has a upward slope of 0.22 on the PPM1. So this suggests there's about a 40% probability for the market to penetrate through that level. If it got through 53, then you could see a sharp sell-off toward the 33.20 and a possibility of going down to 3,300 even. There is some negativity building in this market as we grind out up at this upper levels as we've traded for the last several sessions. The cash S&P also illustrates this. The PPMs are at 0.26, 0.23, and 0.22. There's a fair amount of support. The STX for today is 3365.61. We could see this tested very easily, and because of the narrow ranges, we could see an expansion, and it does look like we could expand this thing on the downside. The key pivot on the upside is R1 3385. So if we did see any sort of rally, we're looking at an R1, S2, possibly an STX day. So I would definitely be leaning a little bit to the short side in any rally today. Looking at the NASDAQ futures, they have a very similar configuration. PPM1 has dropped down to 0.17. It's starting to show quite a bit of weakness. PPM2 is starting to roll over. It's at 0.14. And PPM3 is at 0.27, but they're all rolling over. This suggests if we get through 11,074 today, then the next range will be 10,865 to 10,610. Definitely looks like there's going to be a minor correction coming here. Maybe the beginnings of something bigger. For right now, I'm seeing a lot of momentum fade and the potential for some downside. Those numbers should hold for today. As I promised you in the opening comments, I would cover lumber. This is the decline here that happened after the COVID situation. Prior to all of this happening, this is a weekly graph. This chart, it was set up to continue a trajectory and a trend, and basically that slope, that's how everything was set. Then we got the COVID situation, it bounced back. We saw this nice little right shoulder set up here, and we did get weekly buys on this right at this level here, and we're seeing a sharp expansion. And I will show you a monthly chart here in a minute. This is a substantial move in lumber prices. This movement from urban areas out to the burbs is a real event, and there's going to be a lot of movement in this country because of what's happened both from a social unrest viewpoint as well as jobs and people no longer feeling like they need to be in a city to work. So this is a substantial shift in society, in the demographics from a geographical viewpoint on how people are going to situate themselves. This is a big trend that's happened. There's some real demand for lumber right now, and we could also go through copper and some other supplies, but we'll stick with lumber for today. This monthly graph tells it all. Look at this straight vertical parabolic curve. Now, this market is probably close to peaking out, hitting a peak value. This appears to be demand that is likely to stay around for a while. We could see some back and filling. It's really not about lumber prices that I'm talking about right now. It's actually just demonstrating the type of demand and the confirming what's going on in the economy. The final market that I will cover tonight will be gold. And we'll just stick with this theme. We're going to go top down. Otherwise, we're going to go from monthly, weekly, and daily to look at this market. Now, the monthly chart is definitely going to set up a very large trading range. I talked about this a couple of days ago. What we're going to see is that the market's going to rebound into the market grid. And you see the high so far is 2089, R2 2061, R3 2100. The all-time high in this market was this month at 2089. We're a ways away from hitting that number. We saw a huge day yesterday. This is evident when we break it down and look at the weekly chart. From a weekly viewpoint, what we're doing is we're actually setting up an inside bar. We traded to the R2 numbers 2013, the high so far this week 2015. It's possible we could go as high as 2046. I discussed this on Monday's video. I thought we'd get an S1 R2 number. We did come short of S1 on Monday at $1,939 an ounce. We got to that point. S1 was $19.19, and now we're pushing up at that R2 number at 2013, high so far 2015, last trade 2005. We could see an R3 here, which would put us up to 2046. Looking at today's market grid, the high 2015, right now R2 is 2022, R3 2035. This should represent a ceiling for this market, and we're likely to see some backfilling if we hit these upper end of the numbers. I still think we're going to be in the sideways range, and that this market on a short-term basis was broken. The intermediate and long-term trends are still there, but there's a lot of consolidation that needs to happen in this market before we're just going to rocket to new highs. This will complete the video for today. Don't forget the WaveTech training tomorrow at 4:30 Eastern Time. Thanks again for watching. We'll talk to you tomorrow night.